month coming into this business?
Yeah, so first of all, thank you. Giving me the opportunity to kind of speak here. Obviously, it was my first month in the business. A couple things that really, you know, kind of allowed that to be successful for me. The main thing being inputs. I mean, obviously, when we think of inputs, we think about dials and presentations and things like that, and all that is important. But for me, what it was like my daily inputs just as me, and making sure that I'm up every morning at 5 a.m., consistent gym schedule, eating good, sleeping good, being around people that kind of fill my cup, family, friends, things like that. I think was the biggest part that helped me to be successful. On top of that, putting the inputs in at work and, being there on time, staying late when you need to, hitting the inputs to be able to get the presentations needed to
Absolutely. What do your specific inputs and schedule look like?
So my schedule, I mean, I'm up 5 a.m. every morning, stretch, do my morning devotions. Got to get close with God before you can get close with yourself.
Amen.
And then, eat out the door by 7:25, 7:30, stop, get a coffee if I need it, but in the office by 8 a.m. every day, set up and ready to play. Usually run my day from about 8 to 1:30. Then I'll go break up my day, go hit the gym till about 3, hop on these calls afterwards. And then I'm normally in the office till about, I'd say 9. On a good day, I'm here till about 10, 10:30, and that's because obviously we're making some money talking to people. So
Absolutely. And East Coast. East Coast. But not only is your schedule on point, your inputs are on point, which is most important, but also your lead spend's on point as well. What does your weekly lead spend look like?
Right now, it's about 1,500. Some weeks were a little bit higher. The week of the lock-in, I did, I think, 2,500. But yeah, I'd say anywhere from like 1,500 to 2K.
Absolutely. Let's go. Workflow equals lead flow equals cash flow. It's that simple. So I appreciate you, brother.
Absolutely.
All right. Well, let's introduce our guest for today. So, Claudia, if you could pin our guest. But I'm excited about this one because we've got Raychel on the team call, and she's a silent killer as well. Rach, there you are. What's going on?
Hey, guys.
Drop an emoji in the chat if you know who Raychel is.
There'd be no emojis probably.
So she's a silent killer, but she's a big deal as well.
Hey.
And
Guys.
I'm really excited to pick this call and pick your brain because you were a school teacher before this, right?
Yes. Science.
Okay. Science teacher. So first of all, give everybody a quick introduction on who you are and what led you into even getting into insurance in the first place.
Yeah. So hi, I'm Raychel, guys. Thanks for having me on your call. So I started out in the education space and I did that for 2 years. But before that, I did 1 month of this. Back in 2020, Gabe trained me on in-home final expense from Facebook. And I did about 8K that month. After that, I took 2 years away from this business and I taught science in North Carolina for about 2 years. And I really loved the education side of it. I hit the submit button for myself a lot. That's what my numbers are where they are. But my joy comes from helping other agents hit the submit button. So that's where that education comes from. I spent some time in a previous IMO, and then when Pinnacle started, I transferred over. Now I'm under Mindy Tibbs.
Gotcha. So you originally started when you're in person.
Yep.
And you're like, going in person ain't it. I ain't doing this. So went back to teaching, and then you're like, okay, we're virtual. I guess I can do this.
Well, no, I loved it. I loved the in-home presentations because you could see the person, you could read the room, the shoes on or off, right? I actually really liked it. My parents had a tough time with me going into the rough parts in town though, so.
That's especially final expense.
Yeah.
Yeah, I didn't let Claudia run final expense for long. But okay, cool. And we were on the phone for a few minutes before this call, and you shared that, we were just going over your numbers, and you said last year you did about 100,000 issue paid. And then coming into this year, you're going to hit President's Club and 400K. So I'll just give the floor to you and you can take it whichever way you want, but basically share with everybody what allowed you to make that switch, whether it was schedule, lead spend, inputs, or all the above.
Yeah, literally all of the above. So, before I transferred over to Pinnacle, I didn't have very much training. I wasn't running anything based on scripts. I didn't use a script walking into a call. I was a hot mess. I would basically get on the phone and go mode, right? I didn't really do too well with that, as you can imagine. But then once I transferred over to Mindy and she gave me a clear skeleton for how to walk through my calls, I just started doing that process over and over again on every call, just repeating, repeating, getting faster at it, getting better at each thing. And then once I got the script down, I got the main psychology of the sale down on my skeleton, I started adding muscles to my skeleton to give a good sucker punch. And I turned it into what we call today On My Way to President's Club. So, nitty gritty, my schedule in the first year, I was living at home with my mom and dad. I didn't want to stay there forever. My why was getting out of mom and dad's house and being financially independent from them. So my schedule to do that, it was 12-hour days, 6 days a week most of the time. My mom would be knocking on my door, hey, just quit for the day, come down for dinner or for lunch. No, I have to finish this. I have to make this work. There's no plan B. Like, we're doing this. And that led me to a year later, I was able to move out of their house, move down to Florida on my own. My parents are great. They followed me down here, so they're down here now too. And I'm financially independent, paid off everything for my wedding. I get married in October.
Nice. That's a
Yeah,
blessing.
that's
Can I stop you there?
yeah,
But what I love is I could tell just by your tonality and your tenacity, because you're never gonna, I've never seen one top producer that still lives at home with their parents. So you said, hey, I started in this business with living with my parents, but my goal was to get out as quickly as possible. And because it's like you're right. It's like when you're at home, a lot of times your parent they may not understand or they may not respect it or whatever it is. And they're like, well, why? Like, because they're used to 9 to 5 or whatever it may be, and they don't understand this is a business and how much work it takes. So like, well, yeah, come hang out with us. Dinner's
right.
ready. We got this. We're going to the movies. We're barbecue, family can this, that, and etc. So
Sure.
yeah, I love the fact that you had moved out. Would you be producing what you're producing if you were still living at home? Let me ask you that.
Not as consistently. No. But going back to my parents, they didn't understand then. They understand now. They get it now. When they didn't have to dish out anything to help us pay for the wedding, we could just give back to them. Like, they understand that now.
Definitely. That's a blessing.
Yeah.
Okay. And so you moved down here to Florida, and then where were you going from there?
Yeah, so from there, um, in talking with Mindy, I was like, I want to be a top producer. What does that look like? She gave me again, just like the first time, gave me the skeleton and how to do that. And then I just started rinse, wash, repeat over and over again. It's a copy paste business. You've heard that a million times. Rinse, wash, repeat. And so once, I don't know, like it just clicked. It just clicked for me. I'm like, oh, I got this. And actually, let me tell you when it clicked. So January week 1 of this year, I popped off, had my largest week yet, 25K. I'm still trying to break through that. 25K that first week in January, I was like stoked. And then I looked back at my numbers and I realized the only reason why I hit 25K that week was because the last 2 weeks of December, I let all my leads and my subscriptions just pile up and I had more leads that week. That was when it clicked. I was like, oh, so I guess it is true after like the 50 millionth person telling me, hey, lead spend, like spend more. If you spend more, you make more. You can literally buy your income. And that's when it clicked for me. So I upped my lead spend.
What
Um,
does your lead spend look like weekly right now?
2000.
There you go. And what are you producing a month?
I'm issue paying at least 35 a month.
At least 35. There you go. Who knew?
Yeah, it's great.
And it's the amount of, but when you increase your lead spend, how forgiving it can be too. Because when you're spending a low lead spend, that's a gamble because you better be on point because you're getting a lot more no's. You're going to be getting into presentations with people that you probably wouldn't have presented to in the first place, but you're hammering the phones, you're getting told to F off, you get in fewer presentations, so you're more desperate for presentations. So you take presentations that aren't quality, which then you don't close as much, which then you get in your head because then you start to lose confidence and you start to overthink, and it's this whole downward spiral. Where when I first started, a lot of you guys know, like you guys have heard my story, but I spent 3,000 on leads and went 3 weeks without even making my first sale, let alone breaking even. But I had faith in the system and
Right.
I continued to do that. And that's what allowed me to get good because I don't care how bad you are. You could be the worst closer in the world. If you're keeping a consistent lead spend, you're getting so many conversations and so many at bats that a you're gonna find 20% of people you talk to are gonna buy no matter what. So you're gonna find the laydowns. But on top of that, you're getting so many repetitions in that you're just gonna get good by the law of large numbers.
Pretty much.
So absolutely. Well, so then based on that, so what other tips would you give somebody to hitting President's Club from going to 100 to $400,000 in a year?
I know this is said a lot, but you really need to analyze your numbers and figure out where the holes are in your boat. What's causing you to sink? It might just be something as simple as it was for me, which was lead spend. It might be something in your financial inventory. You're not pulling emotion, or you're pulling too much emotion. We'll talk about some of that today. It might be your intro, might be your tonality. There's just so many moving parts. But the best way you're going to figure that out is by getting on the live dials, unmuting. Okay, your mentors are incredible mentors. We're going to come down and see them in a month or so. But you need somebody to tell you what's going wrong because sometimes you don't know where the holes are, and someone has to point them out to you so you can fix it. For me, it was a lot of pulling emotion. And I was picking up those low-hanging fruits, but I wasn't figuring out how to get the people who were on the fence to buy. And that's where you really make your money, is figuring out how to get those people over onto the other side of, yes, I'll buy. Assuming the sale, getting the buy-in from the client before you ever show numbers, showing a lot of value and what is valuable to them, not what's valuable to you or the client on the previous call, but finding out what's valuable to them and showing them how you can bring value to their portfolio or whatever it is.
Definitely, definitely. Well, let's dive into that. What are some practical tips and track words that agents can use to better dig into the why and build the why properly
Yeah,
throughout their presentations?
cool. Can I screen share?
Yes, Claudia, can you give screen share abilities?
I'm gonna send the request for that. Done.
This would be good.
Nice. Okay, let me go over to my PowerPoint here.
But while you're doing that, Claudia made a good point. If you didn't see in the chat, she asked, "What were you doing when you were issue paying 1,500 weekly?" And it was 25 or less monthly. 2K is the sweet spot. 2K
Yeah,
in a
it's
week in leads
nice.
is the magic number.
If I had the time, I'd spend like 7,000 now that I know that. Okay, can you guys see my screen understanding the problem?
Yes, we can.
Okay, lovely. Okay, so this came from the lock-in that we had with Believe a couple weeks ago, exposing the problem to sell the solution. Okay, so with exposing the problem, we have a why for the client. Every client has a why or their reason as to why they're buying the insurance. If you don't have a purpose for it, you're typically not going to buy insurance if you don't have a reason for it. So finding out what is and isn't important to them and why it is or isn't important to them. It's very important. So for me, my why would definitely be protecting my beneficiary. If I pass away tomorrow, I don't want my fiance fending for himself. I want to be able to want him to figure out how he puts out all the fires financially and vice versa. That's really important to me. But to some people, you get on the phone with them and they tell you, I don't care about a beneficiary, I don't have one. And you're like, crap, they don't have a beneficiary. Click. Well, let's dig into that and see if we can find another why aside from just a beneficiary. We ask a lot of open-ended questions to draw out deeper feelings and emotions. Shanier and I were talking about this morning. So when you ask an open-ended question, it's like, hey, Jonah, what does it look like for Claudia when you can't work, can't bring in an income? You know, is she going to sell the home? Is she going to stay in the home? What does that look like? That's an open-ended question. It leaves space for Claudia to begin articulating what that looks like for her. It gives space for them to start having a conversation with you rather than, Claudia, are you going to sell the home or are you going to stay in it? That's just a one-word answer. Stay in it. No conversation was had there. You don't know if you start building on that, you're not even sure if you're building on the actual why of the client. That might not be super important to them. She might have income coming in for herself and she's like, well, I'll be able to stay in the home no matter what. So you need to go another direction. But you won't know that unless you're asking open-ended questions, getting them to talk, having a conversation with them. But don't try to pull emotion on something that isn't connected to their why. A lot of young people, they tell you, I'm not planning on dying anytime soon. So stop trying to pull emotion with a 22-year-old's death. Like a lot of you guys are in that same age range. Think about how you would be sold, right? Like Danny G told us, you don't need to learn the selling process, you need to learn the buying process. Think about yourself on the other end of that call with a young person. What would sell you on mortgage protection or a life insurance policy or whatever you're selling, an IUL? What would sell you? And then say that. I don't know how much similar it could get, but don't try to pull emotion on something that isn't directly connected to their why. Any questions in that section? Okay, I'm gonna move on here.
Yeah,
Okay,
that's good.
here's what's next.
But if I could add to that actually, because I dealt with the same thing where I would try to apply the same why to every presentation. And when I would sit down with somebody, I flip that to like Shanir's on my screen, so I'll pick on Shanir. I'd be like, let's say, Shanir, 24 years old, whatever it may be, and I'm sitting down with her going through it, and I'd say, now, Shanir, correct me if I'm wrong, but looking at the situation here, I'm assuming you don't plan on dying anytime soon. Would that be a fair assumption? And every time when it'd be a 20, 30-year-old, they're like, yes. And then we'd kind of laugh about it. And you could almost feel the tension drop and their shoulders drop. I'd say, okay, gotcha. Well, of course, the death benefit's important, Shanir. And, we'd want to make sure that your husband is protected on the death side. God forbid something happens. But I'm assuming that the main purpose here for looking into this coverage was to make sure that you were covered on the living side. So God forbid any situation where you did become disabled or you had a heart attack, cancer, stroke, or anything else happened, any other sort of critical, terminal, or chronic illness, would that be a fair assumption? And then just going into it from there. So that was a great point, not trying to pitch the same why every time or figuring out what their why is exactly.
Yeah. Because in the end, if they don't see value for themselves, like if you're getting off of the phone without a sale, you should be being like, oh man, that guy is a bad decision maker. And genuinely feeling that way rather than like, I wonder if I would have said this, maybe that would have had him buy. Like you shouldn't be getting off the phone like that. Don't let yourself get off
No,
the phone like that more than once.
absolutely not.
Yeah. So with life insurance, you don't sell life insurance. You sell ideas. Everything Jonah just said is an idea that life insurance is manipulated to do. You don't sell life insurance anymore. You sell ideas. You just have to figure out which idea is the best idea to fix their problem. But you have to have a conversation to figure out what the problem even is, right? You don't sell life insurance, you sell ideas. That's what I mean. Mortgage protection, that's an idea. Funeral and burial policies, that's an idea. Beneficiary protection, self-preservation. Ooh, that's a big one. I didn't learn about that one till like 3 months ago. changed my business, legacy, leaving a legacy, equity protection. These are all ideas, and a lot of them are the same policy. It's just a different idea, right? Okay, so for instance, with self-preservation, some people don't give a crap about their beneficiary. We talked about that. They don't care if Claudia is going to get a check when Jonah dies. He didn't care about that, but he really cares if he's going to have money coming in when he's disabled. So then you take that idea and you attach it to some fear or insecurity and you blow that up and say, oh yeah, Jonah, well, what's going to happen when ba 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 ba? And then you say, okay, let me tell you what the mortgage protection is going to do. It's going to actually take that entire fear away. If we found something that fit that and was also within the budget, is there any reason why you wouldn't want to do that? Boom. You just sold them an idea. You can do that with anything that's on the screen. The last one says, and more. I keep finding more ideas to sell. I'm really not that good at selling life insurance, but I can tell you what I am good at is selling ideas. Like, I'm good at that. I'm getting even better at it. You keep making ideas. The transitional policy. I don't know where it is. I'm pointing this way because that's where it is on my screen. But the transitional policy. Does anybody know what I mean by that? Anybody? Okay. Let me
I
tell
do.
you.
I'm sorry.
You do, Wilson. Tell
Yeah.
me what it is.
So mostly it's when, let's say God forbid something were to happen, so it's the transition from the home being sold to, it might take 6 to 8 months. So I guess that's what you mean by transitional policy. So instead of like saying it's gonna be like an equity protection, you could just say it's a transitional policies. So you have enough time to, like, sell the home. So it's a way of saying equity protection. That's what I think. That's what I'm assuming it is. I don't know. Might be wrong.
Yeah, you have it partially right. And that's also a great idea. Okay. Like there's no right or wrong to this really, as long as it's the right idea to the client. But the transitional policy, when you have survivorship benefits, okay, let's say Jonah dies and now that income is gone, and Claudia's going to get some of his income, but the state likes to fart around on that. They like to wait around a little bit before they supplement the rest of Claudia's income. So, Claudia, what are you going to do in those 3 to 6 months as the state is kind of sorting through the paperwork on the back end? And let's be real, they're not quick about it. What are you going to do in that transitional time when Jonah's passed away? What are you going to do there? She tells me,
Cry.
cry. Okay, yeah, like why would you be crying about your finances, about him leaving, obviously passing away? What else?
All of the above. He makes
Yeah.
all the money.
Got it, got it. Okay. So Claudia, if we could find a plan that would actually get you through that transitional period and give you 3 to 6 months of Jonah's income replaced during that time so that you can continue on with the rest of life once his benefits kick in, is that something in which you find value?
Oh yeah, definitely.
Okay. Okay. Well, give me about 2 to 3 minutes here. I'm going to take a look around and see what they're going to do. Grab a pen and paper for me, and when we get back on here, we'll talk through the rest once you pick whatever plan, okay?
Sounds good.
Okay. That's a transitional policy. That's an idea. Okay, but they're all ideas nonetheless. Man, that policy has sold a couple of people. That's been a really, really good one. So there's so many ideas to sell. Just got to figure out which one the client will buy, which one is of the most value to the client. Okay.
Rachel, what do you do when, let's say, both spouses are in a great financial position? Let's say hypothetically, you've got a couple mid-50s, they're retiring in the next 5 to 10 years. They're both making 20 grand a month, and they already have a couple life insurance policies set up and money in the bank. What do you do if they don't need it?
If they don't need it, I would have to talk to them more about like what they're like, why did you guys fill this out in the first place? Right? Like I would just deliberately ask that. Okay, yeah. so then what, so you guys clicked on the thing about the mortgage protection, you watched the little video and everything. Um, you're telling me you have all this stuff in place. What were you thinking about when you clicked on that?
Well, I mean, it seemed interesting.
Seemed
You know,
interesting.
we
Okay.
figure we'd check it out and see if we could what it'd look like to have the home paid off.
Got it. Okay. I'm gonna assume that you guys are that they're healthy enough for an IUL and then go with that.
Yep,
Um,
we can say
if,
that.
yep, if they're healthy enough for an IUL, then I'll go, oh, got it. Okay, so you guys are looking to would you say you guys are looking more to like build on what you already have and continue to create lasting legacy and assets, wealth, and all that kind of thing for the family? Is that what you're looking for?
That might sound interesting.
Got
I may
it.
be interested.
Got it. Maybe interested. Okay. And then I would dig a little bit more into that about why it's important to leave a lasting legacy to the family. That way I really, really have an emotional tie to that idea. And then I would drag it and take it.
That's good because I think that it's building the why overall is where a lot of new agents struggle. It's funny because it's where they struggle the most. It's the most commonly skipped. And it's also the most important. And within that, the hardest why to build is if they don't need it. And so this used to be my most frustrating client. I was like, damn, like they have money, they don't need this. But here's the thing is just because they have money and they have other assets, it doesn't mean they don't need it. Like some of those are the best clients, and those turn from the worst clients in the world that I hate it to actually my favorite type of appointment. And how I would leverage that was by what I learned is just drop the sales pressure and drop their guard and drop the wall. Because whenever I would go into, especially if they have money, they know they're going to try to be sold, so they have a wall up. And so I would sit down and I'd say, after the financial inventory is taken, I've got an assessment of all their income, their assets, everything else. I'd say, okay, John, well, looking at the situation here, obviously I'm here to help and serve you guys, but looks like you guys have done a great job of setting yourselves up pretty good, well financially. Always tee them up, make them feel good. Uh, Correct me if I'm wrong, but it looks like you guys really don't need this. And then it's almost like I love dropping that line because it's almost like they don't know what to say. They're like, well, like, yeah, yeah, and then like they don't know because they're expecting you to tell them how much they do need it. So
Hmm.
then they drop their guard, and I'm like, okay, well, again, I'm just trying to figure out if to see what even makes sense for you, John. But it's looking at the situation here. You guys have a good amount of assets in place. You got money in the bank. I'm assuming the main goal here was to make sure that we protect and preserve between now and when you go to retire over the next 10 years at age 65. Would that be a fair assumption? And every single time I've asked that, it's always a resounding yes. They
Hmm.
say yes, because people are more afraid of something jeopardizing their retirement than they are of passing away. And then from there, I go into, all right, John, well, I mean, really, the only situation where, it looks like, we would have to jeopardize that is, if God forbid you did, if you got, God forbid you became disabled or, the work, you had cancer, heart attack, God forbid you were put into a long-term care facility. I'm assuming we were looking to make sure that that savings account, those assets were protected and secure, so you wouldn't have to dip into those in the case of an emergency and then going at it from that. So instead of, oh, we have savings, we have this, we have that, well, I'm assuming the main goal was to protect that and leverage the insurance company's money instead of your own to make sure those assets were protected and then going into it from there.
I like that way better than what I said. Say that, guys.
Well,
I'm gonna listen.
I didn't mean to hijack your training, but
Oh,
that's one
that
thing
was
that I think overall, like if you had to pinpoint one thing where people struggle with a lot is just like, oh, dude, they have money and I don't know what to do because
yeah.
it's tough.
Wow, that's huge. That's so good. Mm, good. Okay. Any questions with the ideas? And you could keep creating ideas. Like once you find something else, if they're like, oh, well, I run a dog shelter and I just want to make sure that the dogs are, taken care of. Oh, okay, great. We have a dog protection policy. Okay, like, you know what I mean? Like you can come up with, so we want this to pay out to Claudia, Jonah, so that she can continue taking care of the dogs and the shelter and all of that. Yeah. Okay, cool, cool.
Who here has heard Jake Rotterman's cat society story? Speaking of dogs, drop an emoji in the. I don't know if Jake's in a presentation or not, but if he's not, bro, unmute and share that story real quick. Hilarious. But next time you're with Jake, ask him to share that story.
Cool.
But anyway,
That's amazing. I think I saw a hand raised. I'm not sure. Was it Felix? And maybe that was just me. I don't know. Okay. Cool. We got a cat in the chat. Okay. So with ideas, people buy an emotion, they justify it with logic. You do it too. Let me tell you how. So everybody on the call, hopefully you wear deodorant and you're wearing it today, right? That was an emotional sale that you justified with logic. I don't want to stink. I don't want to smell. Okay. And if I smell, then other people aren't going to want to be by me. I'm not going to have friends. I'm not going to find a person to get married to. Like, I'm not, people don't want to be around me, and I don't want to feel rejected. Emotion. So, therefore, I should buy the deodorant. Logic. Okay. So, people buy with emotion, they justify it with logic. So, with that emotion, connect their emotions to a sense of security or insecurity and then magnify it. Okay, so if we're talking with husband and wife, we know the connection there. When hubby dies, the funds, or vice versa, that is connected to insecurity. And then we twist and magnify. That way we can show them the solution later. Okay, other ways that we can do that with self-preservation. What are you going to do? How are you going to, you know, keep up with your current lifestyle when you're not able to work or you're physically disabled, you have a heart attack and you land in the hospital, you're waiting a few months for disability to kick in, right? So we have these emotions that we're pulling out, tying them and pulling out the insecurity and magnifying it. And then we move on to the logic. You present the solution to them to bring the security. It sounds really simple. There's a couple word tracks to do it, but this is the basic idea of how this works. It's called the psychology of the sale, or a portion of it. So with beneficiary,
if Rachel, if we could stop right there, because I wanna touch on that as well. Does that make sense, guys? What Rachel just said? Because so many agents try to do the inverse of that, where they'll sell on logic and they'll hit on all these logic points, and they're trying to build the emotion with the logic. And so one simple way that I learned, and I would write this down, is just less about the product and the benefits, more about how that solves their problem. What does that do for them? So that would be the difference between and Wilson's on my screen, so I'll pick on Wilson, where it's like, hey, Wilson, so we got this really awesome product. So what it is if you become sick, disabled, pass away, your $300,000 mortgage gets paid off. And if you never have to use it, you get all your money back at the end. So it's a no-brainer. Either you're getting a $300,000 check or you get all your money back, and it's really awesome and da 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 da. But don't get me wrong, there is a time and a place where you will explain how the product works. But before that, going back to what Rachel was saying, is ask those questions. God forbid, what does that look like? Okay, walk me through that. How's that going to make you feel? What's the financial situation going to look like? And breaking it down from there, and then back it up by the logic.
yes. Yeah, absolutely. I mean, car salesmen do it all the time. They're not going to start talking to you about how the Ferrari works. They're going to let you drive the Ferrari first.
Amen to that.
It's just the way it works. You love that, Jonah.
I do like that.
That's cool. Okay.
You got a Zoom call of high testosterone 20-year-old males. So I think we appreciate that analogy.
Of course, guys. Yeah. Okay. So let's put some feet to this. With emotion, here's a couple of word tracks that you can either screenshot or whatever. This is a real client that I have, Joan and Rodney. Emotion. Joan, what does it look like for you when the kids if Rodney doesn't come home tomorrow? Now with emotion, this is something I want to pause and say, something that I've learned in the last 2 weeks from Jason Edwards. Freaking amazing guy, by the way. He's willing to give out his number. He's willing to sit and listen to you. He's an amazing, he's our corporate sale, one of our corporate sales trainers. Amazing guy. When it comes to emotion, a lot of agents pull too much emotion. And then all the flags start going up in the back of the mind. Wait, why are they trying to pull so much emotion? And then the person is like, oh, they're trying to manipulate me. And then it smells like sales in the air. It's just so salesy. You may as well have said, hi, how are you doing? Okay, that's so salesy. When there's too much emotion, then the client starts to, oh, they're trying to sell me. Oh, okay. So when you ask a question like this, Jason says, don't let it sit longer than 3 to 5 seconds in silence. Now, a lot of people will tell you to let them sit there in silence. That's good for when you're hard closing and asking which of these 3 options are you picking. Okay, but it's not really great for emotion. It actually pulls too much emotion. They feel manipulated, and then sales is in the air and they can't think about anything else. So instead, when you ask the emotional question and you sit back about 3 to 5 seconds, Jason says, hey, Jonah, I'm not sure if my question came through. Did you hear me there? What does that look like for the kids, if you and the kids, if Rodney doesn't come home? What does that look like for you? Right? So it builds just enough emotion, because I found I was building way too much and I was losing people. I had a lady cry on the call like an hour before I talked to Jason. I was like, man, I wish I would have known that like an hour ago.
Man, I don't think any of our guys have that problem. We're on the side of we need to build more emotion.
Got it. Okay, got it. I'll get off that one for a second then. So, and another key thing here about this word track, I'm making her tell me what it looks like for her when he dies. Don't make him tell you what it looks like for her. Make her, because now she's pulling the emotion for you. So always ask the person who will be affected what it looks like.
Yes.
Always. That's one small detail that I've changed, and it's really, really been beneficial. So then now we connect the logic.
And that's huge. Did everybody get that? Rachel, could you say that one more time? I would write that down.
Always ask the person who will be affected by the problem what it looks like for them. Joan,
Yep.
what does it look like for you when Rodney does not come home? That way she pulls the emotion for me.
That's huge, because I can't tell you how many times I've done the opposite of that and made the mistake of asking the husband if he was the primary breadwinner, of like, John, what would that look? Oh, she'd be fine. So you get a part-time job or whatever, but that's a big one.
Ooh, you hand them the rebuttal when you do that. It's so awkward. You literally hand them the stick to beat you with. It sucks.
Yep.
Yeah. So that's huge. Logic. Got it. Okay. Well, let me tell you how the policy is going to take care of you and the kids when that happens. Emotion, logic. Emotion, logic. And then, of course, you want to, in the logic part, explain the idea of the emotion that you connected that insecurity to. But you have to be able to pull that why out first. You have to be able to do that, because otherwise this little process, you don't have a running water sink for this. It doesn't work unless you have connected their why first and had a conversation. So that's just one example of beneficiary protection. Another idea, self-preservation. Here's a word track for that. James, this is pretty straightforward. What does it look like for you if you become disabled? Or I shouldn't have if in there. No, Shanier knows this. No ifs and cans. Kiss those goodbye. No ifs, no cans. What does it look like when you become disabled and can't continue to work? What would have to change there? Okay. And then don't let it sit any longer, 3 to 5 seconds, same thing. Got it. Okay, so it would be tight financially. Got it. You repeat what they say, you highlight it. Okay, so the policy will pay out directly to you. I love that line, directly to you, or directly to your hands is something I've been saying recently, and the clients love hearing it. directly to your hands when that happens, so you can focus on getting better. You can focus on getting better. That's a self-preservation thing. Now with their beneficiary, obviously you have to list someone or something. So when you get into that part, great. So, you know, if you're not living, who do you want the funds to go to? You know, if you're not living, who do you want the funds to go to? Obviously, it's going to go to your hands. Okay. But if you're for some reason not, you know, who would that go to? And then they'll list someone. That's self-preservation, a word track there. Another one here, let me see. Oop, the transitional policy. Here's a specific word track for that. We've talked through a little bit. Rita, what does it look like for Leah while she's waiting on the house to sell? Let's assume this is like an older person and the daughter is inheriting. Daughter's not on the phone for that. What does it look like for Leah while she's waiting on the house to sell? What will she do in that transitional time? I like to use transitional here. That way it helps them understand it later. When I say, okay, so this transitional policy is going to do ba, 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 ba. So they're already checked in and they know what I'm talking about because I've mentioned it before. What will she do in that transitional time? Got it. So the policy will pay out directly to Leah or directly to Leah's hands. So she won't be worrying about money or losing the home in the transitional policy. Okay. Yeah, so you don't sell life insurance, you sell ideas. But you have to figure out which idea works best for the client you're on the phone with, not which idea works best on you or the client previous. You've got to figure out which idea works best for them. Let me see. That might be it. There you go.
Could you possibly go back to the idea slide again, please?
To which one? The ideas?
Yes, ma'am.
There you go.
You don't sell life insurance, you just sell ideas.
No, no,
Exactly.
no, no. The first one that had all the list of ideas.
Oh, all the ideas, sure. Here. Yep.
Thank you.
Yeah, absolutely. They're all about how you frame it to the client. You want to, Alyssa says, this is a great line. You want to touch on their why 5 times before you even mention getting into the application. At least 5 times. You want to touch on their why at least 5 times. I
Oh,
found
that's good.
useful. Yeah, that's very useful.
That's good.
Lisa.
Awesome, Rachel. Well, we're going on 45 minutes here, but one last thing I wanted to touch on, and then we can open it up for questions if anybody has any questions of annual reviews. Are you doing those?
I am. I love my annual reviews. They take me like 10 minutes.
Awesome. Break down how you do those.
Yeah. So I call my annual reviews and I try to OCC them or one call close them. I get them on the line, which by the way, this is something we didn't talk about on the call, but organization. If you are organized in this business, you're going to make a lot of money just simply by being really, really organized.
Yeah.
So I'm able to pull up my annual reviews and have them on the phone within like 2 minutes and just get in there because I've done a great job documenting them when I sold them originally. I do everything digital. When I travel, all I take is my dialing phone and my laptop. Obviously the charger. Okay. But like I don't take a lot. I don't need to. Okay, so I have all of my digital financial inventories. I copy paste everything. I'm fast. I'm really fast. I'm efficient, very, very quick at that. And tracking my numbers and everything too. But with my annual reviews, I get them on the phone. I go, hey, Jonah, this is Rachel. I helped you with your Kansas City life policy last year. Do you remember me?
Yes, I do.
Okay, and I always say the name of the carrier that they're currently with. I don't say I helped you with your mortgage protection. Click. Because they've heard mortgage protection and I've told them do not answer that. A lot of them don't save your phone number. I make my clients do it, but they still don't. They forget to. Okay, I try to make them do it while I'm on the phone with them. But if they've changed numbers or what since then, and you have to get them back on the phone from some other source, I always say the name of their policy. They know that. They don't know mortgage protection a lot of times or transitional policy. They don't remember that, but they remember Kansas City because that's the one that takes out the $200 every month. So I say Kansas City. They go, oh, yeah. What's up, Rachel? Boom. Having a really easy conversation now. So, hey, yeah, it's that time of year, Jonah, where we go over the policy with you for the annual review. Okay, so since last year when we placed you with Kansas City, that was the best thing that we had there at the time. But since then, we've contracted with a bunch of new carriers, all A+ rated as always. So we're going to look over what you have now and want to increase or modify anything. We can take a look at all those options today, okay? And then you
And
can
boom.
sign there. So, and then I tell them, great. So I either have some time tomorrow afternoon or evening, or I can just go ahead and get this done now. It'll take me about 10 minutes. Which do you prefer? 99% of the time, if they're free and they have 10 minutes, they're going to do it with me right there. Okay. If I get no-showed, or if I just have a space that I couldn't for some freaking reason book, then I'll just get on the phone with a bunch of annual review people. So then at that point, I will have already looked in the background to see if there's anything that I can do to get them in a better position or to even get them to do more, to spend more. I've documented really well. We covered half of the home. We covered only income. They weren't healthy enough for this. They might be healthy enough for that now. So I'll have kind of a game plan before walking in if I need to pre-screen or something. And then I'll just go from there. Any changes in your medical? Have you picked up smoking? Have you had any hospitalizations in the last year? Is your beneficiary still Claudia? Right? Oh, yeah. Great. We're using the same banking. Cool. Okay. And then I'll tell them what the new policy is and what it does. And I'll review what the old policy does. And then I'll say, okay, great. So we have an $80,000 option, of 60,000 or a 50,000. Which of the three do you prefer? And I always give them 3 options that are new. I don't say, or do you want to stay with the old policy? I don't do that. I give them 2 options that are both a sale. Like, that's it. I literally give them 2 options that are both a sale. Because if I give them an option that is and an option that isn't, where they are right now, we're creatures of habit. They're going to stay right where they are right now. I always give them 2 options that are a sale. Great.
I
Okay,
love it.
cool. And then I've already filled out the application because I have all their information. Why the heck not? I send them over the signatures and we're done. I got done with one yesterday, 11 minutes. And their portal was set up and everything. Like you have to just be really fast. You need to get efficient and very organized. If you're still working on paper, I'm telling you, it's slowing you down and you're losing money. You've got to find a way to be efficient. You've got to find a way.
Yep. To echo what you said, getting organized will make you so much more money. And so, my book of business, a lot of you guys have seen it. A lot of you guys use that template, simple spreadsheet, but I'm very detailed. I've got all of the information in there: name, phone number, date of birth. I'll save everything on the financial inventory. I'll take screenshots of the application. I'll take the client worksheet. I'll scan that in and scan that into my Google Drive and have a link sheet to all my client worksheets so I know their health and everything else. So when you guys do call them back in a year, 2 years, 3 years, etc., you have all the information on file and you can go about it in an efficient manner. So I would encourage all of you guys got to have that long-term vision in mind with this book you're building. And that's what I love about this business too, because if let's say we're selling solar or we're selling pest control or alarms or whatever, like we've hired a lot of people. There's people on the Zoom call that were selling all 3 of those products. That's a one and done sale, and you're constantly having to go out there and find new clients, find new prospects. Versus with this, you stay organized, you go hard, and you build a significant book of business. That's going to reap you dividends for years to come because you call them back, maybe upgrade their coverage, if you insured the wife, insure the husband, maybe they covered half mortgage, cover the full mortgage, annuity opportunities, health insurance. There's a lot of different verticals that can go, and it genuinely every year this business gets easier and easier as you progress.
It's true.
So go ahead.
Oh, I just wanted to say this year for an annual review. Last year, I didn't know what I was doing, I guess. And I put this 72-year-old male with Mutual of Omaha's Living Promise. He was healthy enough for an IUL. And I got him an IUL and living benefits. This year, he's like, oh, thank you so much. This is incredible. So we're going to do this again next year. So yeah, well, I even call my clients just to review what they have. And if there's anything I can't really do for them, then I'll ask for referrals. I did a referral yesterday for a reoccurring client. I got her and her uncle new policies that were better. And then also I got a referral for her, I think like her brother or something. That's huge. That's a lead I didn't have to pay for. And I have 3 policies in one home. That's a really strong connection. You know, so ask for referrals.
How do you ask for referrals?
Yeah, great. So I'm so glad that we were able to help you, Jonah, and that we've been able to help you for a couple years now, even. So is there anyone else that you can think of who would really benefit from a policy like this, having protection in place for the family? Is there anybody that you can think of since it's benefited you so well? Is there anybody else that we can help?
Mm, yeah, my granddaughter Stacy, she just bought a home.
Oh, she just bought a home. Oh, new home buyer. Okay.
She
Cool.
is. Yep.
Got it. Got it. New home buyer just bought a home. Okay. Well, then let's do this. Go ahead and grab a pen and paper. I'm going to have you make sure that she has my information, but also want to make sure that I have hers so that we can get this information out to her. So we're going to exchange numbers. They already have my number, but it feels like we're exchanging almost like a social, right? Because give me her number is a little bit too much. So you want to give them something like they're getting something in
Mm,
return. So the psychology behind that is pretty simple, but it's making sure that they get something from you first and then they give you the other information. And if you've built a really good connection with that client, you'll be fine getting the referral. And even if you don't, you already made sales in that home for a couple of years. You made your money off of it. If they're like, no, I'm nervous to whatever for some reason, then okay, like, what's the loss? You know?
that's good. Wilson asked a good question. He said, "What does your schedule look like?"
So my schedule, Monday mornings, I dial 8 to 11 for myself. I take a small break between 12 and like 2. That's when I can do anything I want in that space. I can go grocery shopping, I can take a nap, I can listen to
Oh
podcasts.
no, oh no, not the grocery store.
What, people don't like the grocery store?
Not the whole other conversation, but I started back to what you're saying.
Okay. Hey, I gotta pay the bills for the groceries. Yeah. So I go, and in that space, I can do whatever I want. I can go swimming in my pool. I can go take some time in the gym, whatever. And then I run my appointments from 2 to 8. And then Tuesday, Wednesday, Thursday, my sister dials for me in the morning. That way I have some free time. So this morning I did some one-on-one mentorship because I find a lot of joy in talking with agents one-on-one. I love that. That's something that fuels me and helps fuel my mindset and fuels my why in the business. So it's something I make space for. And I also talked with my agent this morning. We went through some things that will be helpful for her in the business. And then I have my 12 to 2 again, and then I go running again in the afternoons and evenings. And if I don't hit my goal by Friday, my goal every week is 12,000. If I don't hit my goal by Friday, Saturday I have to work. Or if I just feel a little bit behind or like I had a crappy week for some reason, I'm just gonna work Saturday if I have a free Saturday because it's PC. Like so yeah.
Yeah, yeah, that's huge though. Where Saturdays, a lot of people have mixed it. For me, I worked every single Saturday for 4.5 years straight, and now I work a half Saturday. I still work Saturdays, but I work a half day. And Saturdays were the day I went the most hard. I took the most seriously. But here's the thing: not everybody wants to work Saturdays. And so if you don't want to work Saturdays, everybody has different goals in this business. For me, I wanted to produce a lot of life insurance. And in order to hit my goals, you best bet I was working Saturdays because that's when everybody was home and those were the best days to close. But based on your goals, if you don't want to work Saturdays, that's fine, but earn the right to take Saturdays off.
Mm-hmm, mm-hmm.
And what you said, I want to emphasize what you said. If I didn't hit my inputs during the week, I didn't hit my production that I need to do, well, I'm working Saturdays. So that was awesome. Well, Rachel, close us out. Give us some parting words.
You guys could do it. It's get really organized, figure out what your goal is and work backward from there. Also take 3 top producers that you can resonate with, their style, the way they handle people, the way that they live their life. Take 3 top producers, and you want to be producing their numbers, living their life. Get around them, pick their brain. I have people reach out to me all the time. I do those one-on-one calls when I have time for them. I schedule them in, and just start to copy paste those 3 people. And you'll be surprised by, 2 months or so, or even in a month, you'll be that person. I'm not shocked that I am a top producer because I put all of the stuff in to make myself a top producer. And my mentors helped me do that. You can do it too. You just need to put the effort in and get around who you need to get around. So
Amen to that. Raychel, are you going to be speaking at the Chicago conference?
I think so. I don't know if it's that one or if it's the Tampa. I'm really confused about which one is which. Is that the one on September 22?
Yes.
Then a yes.
Cool. We're looking forward to seeing you on stage.
Okay, cool. Thanks, Mindy. Sorry,
Thank you
guys.
for hopping on and sharing your words of wisdom.
Sure. I'll see you guys from the stage. All right.
Absolutely. And a reminder, if you guys have not gotten your tickets to the Chicago conference, please do so. Look forward to seeing you all there. God
Cool.
bless.
Bye, guys.